In 1974, the United States made the most powerful financial deal in modern history. Not a treaty, not a trade agreement. A secret economic pact with Saudi Arabia that created the system every country on earth still uses to buy the single most important resource known to man: oil. For 50 years, this system has shaped wars, alliances, global finance, the rise of superpowers, and the collapse of nations. It has kept the United States dominant, kept the dollar supreme, and kept the world dependent. It is called the petrodollar system. And right now, it is breaking. This is not speculation. It is not political fantasy. It is a structural shift already happening. In 2024, Saudi Arabia officially joined the BRICS trading system and began accepting non-dollar currencies for oil. China has already settled millions of barrels of crude in yuan. India is paying for Russian oil in rupees. Brazil and China trade directly without touching the dollar. The petrodollar era is ending. But here is the part no one understands. When the petrodollar fails, the entire global monetary order fails with it. And when that happens, the United States does not just lose influence. The world enters a new economic age. To understand what is coming, you need to understand what the petrodollar really is. After World War II, the United States created the dollar-based global system through the Bretton Woods Agreement. The dollar was backed by gold, and other currencies were pegged to the dollar. But in 1971, President Nixon ended the gold standard. Overnight, the dollar became a pure fiat currency, a dollar backed by nothing. This could have been the end of American financial dominance. Countries began selling dollars, inflation spiked, and confidence collapsed. The United States needed a new foundation for the dollar, something as powerful as gold, but easier to control. So, in 1974, the United States approached the one country that mattered most to global energy supply: Saudi Arabia. The deal was simple. The United States would protect Saudi Arabia militarily. In return, every barrel of Saudi oil would be priced exclusively in dollars, not just for America, for every nation. Oil producers worldwide followed. Within 2 years, every major oil exporting nation priced their oil in dollars. This created an artificial, permanent global demand for the dollar. If a country wanted oil, it had to buy dollars first. This forced every nation to store dollars. It forced global trade to use dollars. It cemented the dollar as the world's reserve currency. This single agreement is the reason the United States can print trillions without collapsing its currency. It is the reason the US can run massive deficits, fund endless wars, and maintain the largest military in history. It is the reason sanctions work. It is the reason the world depends on American banks, American markets, American bonds, and American debt. The petrodollar is not about oil. It is about control. But in 2025, for the first time in 50 years, the foundation is cracking. Countries are breaking away, not because they want to, because they must. The world is shifting from a unipolar dollar system to a multipolar currency world. This shift is driven by three forces that are impossible to stop. Force one is the rise of China. China is now the largest oil importer on Earth. It makes no sense for the biggest buyer to use the currency of a geopolitical rival. China has spent 15 years building yuan-based payment systems, forming energy partnerships, and signing massive contracts with oil producers. The Shanghai Oil Exchange now trades crude in yuan convertible to gold. For oil exporters, this is an attractive alternative to dollars. Force 2 is U.S. sanctions overuse. When the United States sanctioned Russia in 2022 and froze its dollar reserves, the rest of the world took notice. If the United States can freeze Russia's reserves, it can freeze anyone's. This terrified oil producers, especially those outside Western alliances. Countries like Saudi Arabia, Iran, Brazil, South Africa, and Indonesia realized the dollar is not neutral. It is a tool of U.S. policy. So they began looking for alternatives. Force 3 is the U.S. debt crisis. The United States now owes more than $36 trillion. Interest payments alone are approaching $1 trillion per year. Foreign nations see the dollar weakening under the weight of debt and inflation. They see the Federal Reserve printing trillions to stabilize markets. They fear that holding dollars is becoming dangerous. Together, these forces are unraveling the petrodollar system. But what happens when it collapses? Here is the first consequence. The demand for dollars plunges. Right now, 60% of global reserves are held in dollars. This is not because countries love the dollar. It is because they need it for oil and for trade. When oil no longer needs dollars, nations sell their reserves. The dollar weakens sharply. Import prices rise. Inflation accelerates. The United States loses the privilege of printing its own global demand. The second consequence is higher interest rates. Foreign countries buy U.S. Treasury bonds to store their dollar reserves. And this demand keeps interest rates low. When the petrodollar fades, demand for U.S. Treasuries collapses. Interest rates rise to attract buyers. Higher rates mean higher borrowing costs for the United States. Debt spirals. Budget strain. The third consequence is geopolitical realignment. Without the petrodollar, the United States loses the leverage that comes from controlling global trade. Sanctions weaken. U.S. influence declines. Regional powers like China, India, and Saudi Arabia rise. But here is the twist. The collapse of the petrodollar does not just weaken the United States. It destabilizes the entire world. Oil is the backbone of global energy. Every country depends on it. Every industry depends on it. Every cargo ship, airplane, tractor, and factory depends on it. When the currency system behind oil pricing fractures, global trade becomes chaotic. Countries negotiate separate currency deals. Prices fluctuate wildly. Exchange rates become volatile. Smaller countries suffer first. Energy becomes more expensive. Supply chains break. Inflation spreads. The world enters a period of financial fragmentation. But there's a deeper layer to this story. The petrodollar was not just an oil agreement. It was the glue of globalization. It forced countries to store dollars, which made them invest in U.S. bonds. Those U.S. bonds funded American deficits. American deficits funded global military dominance. Military dominance enforced global stability. Global stability enabled global trade. Remove the petrodollar, and the entire chain weakens. This creates openings for new currency blocks. China and Russia want a BRICS commodity-backed currency. Saudi Arabia wants a basket-based oil price system. India wants regional settlement networks. Europe wants more autonomy. The world is drifting into currency zones, not a single reserve system. But here's the most important question. Does the fall of the petrodollar mean the fall of the United States? Not immediately, but the U.S. faces the greatest financial shift since 1971. The era of unlimited deficit spending ends. The era of artificially low interest rates ends. The era of global dollar dominance ends. The United States must now compete economically, not rely on the dollar system to maintain power. So what comes next? There are three possible paths. Path one is a controlled transition. The United States accepts a multipolar currency world and reforms its fiscal system. This means reducing deficits, raising interest rates, and creating a more stable dollar. Difficult, but possible. Path two is forced inflation. As global demand for dollars falls, the Federal Reserve prints money to absorb unwanted treasuries. This leads to sustained high inflation, erosion of savings, and weakening purchasing power. This is the most likely path. Path 3 is geopolitical conflict. Historically, when global currency orders collapse, wars follow. Britain lost the pound's dominance after World War II, or Before that, European currency collapses triggered revolutions and conflicts. When the petrodollar collapses, nations scramble for resources and alliances. Tensions rise. But this does not guarantee war. It guarantees instability. The next decade will be defined by fragmentation, not unity. But while the system shifts, something else is happening quietly. Oil producers are planning for a world where the dollar is no longer central. Saudi Arabia is investing billions into Chinese partnerships. The UAE is settling oil in yuan and rupees. Russia, Iran, and China are building a unified energy market. These are not small moves. These are the structural changes that precede a global shift. But here's the real question everyone wants answered. What happens to ordinary people when the petrodollar collapses? First, energy prices become more volatile. Second, inflation becomes more persistent. If the dollar weakens, imports cost more. Everything from electronics to food rises in price. Third, interest rates rise globally. This affects mortgages, car loans, business loans, and national debt. Fourth, currencies in emerging markets become unstable. Countries with weak financial systems will face crises first. Fifth, wealth moves toward hard assets. Real estate, commodities, resource companies, and energy infrastructure become the big winners. Sixth, nations with strong commodity production gain power. Brazil, Saudi Arabia, UAE, Australia, and Canada rise as resource superpowers. Meanwhile, nations that rely heavily on imports face greater pressure. This is why understanding the fall of the petrodollar is not theoretical. It is survival. But the collapse will not happen in one moment. It will happen in stages. Stage 1 is diversification. Countries begin using non-dollar currencies for oil. We are already here. Stage 2 is reserve rebalancing. Nations reduce their dollar reserves and increase gold and yen. This is happening now. Stage 3 is energy pricing shifts. Major producers begin listing oil in multiple currencies. Stage 4 is a parallel oil market. BRICS countries form their own settlement systems. Stage 5 is the tipping point. One major oil exporter fully abandons the dollar. Stage 6 is global fragmentation. The dollar remains important but no longer central. This timeline is already underway. Gold reserves are rising globally. UN settlements are increasing. Dollar dominance has fallen from 85% of global reserves in 1977 to 58% today. And it will continue falling. But here's the twist. The petrodollar may collapse, but the dollar itself will not disappear. It will remain a major currency. It will remain deeply liquid, It will remain widely used. It simply will not be the single pillar of the global system. It will be one pillar among several. This is the true meaning of the shift. Not destruction, decentralization. The world is moving toward multiple reserve currencies: dollar, euro, yuan, a possible BRICS commodity unit, and gold. Yes, gold. The metal that backed money for 5,000 years is returning quietly through central bank accumulation. When the petrodollar collapses, gold regains its role as the neutral asset in global trade. That is the final irony. The end of the petrodollar brings the world closer to the system the United States abandoned in 1971. A world where currency must be backed by real value. A world where money must be earned, not printed endlessly. A world where global power is shared, not centralized. We are living through the transition. The collapse will not come with alarms. It will come quietly, one trade deal at a time, one oil contract at a time, one central bank decision at a time. Until one day, we realize the system that defined 50 years of global power is gone, and a new system has taken its place. The petrodollar was the most powerful financial invention of the 20th century. Its collapse will be the defining economic event of the 21st. Understanding it is not optional, it is essential. Because the world you live in today is built on a foundation that is already shifting, and the world you're entering will operate under rules that do not yet exist. If this helped you see the coming shift more clearly, subscribe. Because the collapse of the